Welcome back, traders. It's been a while since I've watched an ICT lecture. I'm nearing the end of my 2024 backtesting series, so I've been using my time to finish that up. Afterwards, I have plans to upload more educational videos. But for now, we have ICT. So let's take a look at this one called Presession Trade on May 15th.
So we had relative equal lows in here. We had a sweep right below that on Wednesday. Short I took yesterday. And then moving into PPI, Fed Chair Powell speaking 8:40 this morning. We have unemployment claims this morning at 8:30. And then I believe we have something at 10 o'clock. I don't have it in front of me. I apologize. But we had a nice sell-off overnight in here. And we used Tuesday's PM session, 1% of fair value gap, as a London short. And we dipped down inside of that daily. Let's go through the chart quick because I know some of you are like, what is going on here? If you recall, we've been bullish. We were aiming for this BDA right here, this city. We want to see it trade above it, come back down, treat it as an inversion fair value gap. I'm still under the expectation of that, and try to reach up into this area here, this inefficiency, and back down into just a 1 minute chart. Let's see, that is the fair value gap. I told you I wanted to see go above it, come back down in. So we worked inside this consequent encroachment level here. And we're just reaching the high of that fair value gap that I told you I was aiming for on the daily chart. And then we have this up here. So it's a lot of range still, but with Powell speaking and all other stuff on the plate today, I mean, hey, anything can happen. But overnight, we have the London sell-off here. Really, really nice. And then we have a new day opening gap here. I'm not going to cover all this in. It's just for you to take a look at it. And then yesterday's business over here. I'll show you the executions. That was the business on Wednesday. I was walking you through on X, just a very low-hanging fruit objective, reaching for that, not requiring that. Holding on to it would have been a wonderful run up into here. That's okay. Selling short there, as I showed you in review, taking the profits below the relative equal lows. And then we went to consolidation. Okay. No other trades overnight. Slept in this morning, London session. And here's the business over here. So what I'm going to do is I'm going to just take this off because it's too much going on for the morning. And it's the high of that fair value gap on the daily chart. So I could be wrong about where it's going to go. It may not go up there and clear out the buy stops up here, which I think is a potential scenario if we start to rally. So I'm watching this area here. Too smooth. Okay. So you can see how we used the fair value gap here. Again, you're projecting these in the future, folks. And I see a lot of people complaining, and don't worry, I'll get down to the nitty gritty over here, what I did here. But when you create templates or workspaces in your charting platform, now obviously I use TradingView, but the idea of saving workspaces or templates where you keep pertinent information organized, so that way, like for instance, let's say like this. You want to keep a workspace of only the PM session first presented fair value gaps. So that way when you toggle that on, your chart will only populate the last 5 or last 10. Okay. So that way you can see your price delivery in reference to those PD arrays. You can do the same thing with first presented fair value gap in the New York Open, the regular opening range between 9:30 and 10 o'clock Eastern time. You can do it with the Asian session. You can do it with the London session. And that way you're not holding a ton of things on your chart. Like, as you can see here, I'm only looking at things that are pertinent. And it's because I go through all of my templates that I have and I focus on the information that's salient for that given market structure. So that's why I counsel you to be a little bit, to be a little bit more organized when you're collecting your information. You don't have to have a chart. Well, first of all, it's impossible for you to navigate if you use every possible thing that I ever refer to as a PD array. It's overkill. So what you need to do is spend time organizing so that way the information is at a click, but it's not inundating you with oversaturation of information where it's analysis paralysis. So the only thing we're looking for is things that lead to the likelihood of a market running to an old high, old low for liquidity or inefficiencies. So that way it can redeliver and offer efficient market pricing for that given market structure on that given day or moment. So anyway.
Okay, so the first thing he's talking about here is grouping different PD arrays into its own category and saving them in drawing sets. So you can load up a set and see, let's say, the past 5 new week opening gaps. Another one, you can see the first presented fair value gaps, so on and so forth. So I've done this before, and I think for most people, it is the best way to organize your charting. However, when I did this personally, I struggled with it because I will forget things that when I'm toggling through the different sets. And I've come to find out that it was actually better for me to just have one chart with all the relevant PD arrays that I'm interested in. Of course, as you can imagine, sometimes I will have way too many lines on my chart and get confused. That is the drawback, but I've learned to work with it and only use the PD arrays that I'm interested in at the time. I'm not putting every single little PD array on my screen. So, while I do believe ICT's recommendation of having multiple sets is the best way to do it, it's not the only way. If you're going to put everything on just one chart like I do, you seriously need to limit which PD arrays you're going to keep around and constantly make sure to clean up your chart.
The daily fair value gap, I told you we were wanting to trade to and above and come back down in and treat it as inversion fair value gap. Here is the consequent encroachment or midpoint of that level. This level here is just simply where sell side was. So I'll take that off. You can see that on your charts. And then we went back above consequent encroachment of that daily fair value gap and trade up into a smaller Asian session. Remember, this is an Asian session. First presented fair value gap. It uses that rated consequent encroachment, perfect delivery, trades back down to consequent encroachment midpoint of this larger daily fair value gap we're watching for it to act as a discount array. And if you look in here, this candlestick right there. What I'm doing is I'm using this right here. I wanted to see this act as bullish discount array. Okay, and you can see that right there. Using consequent encroachment of that. So when I open trade down and I'm looking at this level here, wanting to see it rally back above and take out this high. My stop loss was consequent encroachment of this buy side and balance sell side efficiency. Future volume imbalances. So stop is right there. Close to it. Left relative equal lows. Came back above, tapped it here, rallied. The scenario here is this buy side and balance sell side efficiency. I added to it, pyramiding. You see the business there, right here, consequent encroachment of that. Bullish fair value gap. Okay, and once price rallied out, the stop loss was raised up, and so you saw where it was at the time of recording of this presentation here. Then it rallied above. Asian sessions 2 days ago. Asian sessions first percent of fair value gap. Look at the bodies respecting that consequent encroachment level, and I added to it so you can see as we traded down into it just below the consequent encroachment level. Felt confident that we would hit that because we have a breaker here. Look at the bodies, and then look at the bodies over here. So while we didn't see a lower low for the wick, look at the bodies. The bodies are telling you the narrative behind price. So we have a low of this candlestick's close, and then we have the open of this candlestick. So the bodies went lower on this swing low than it did in this one. So that constitutes a bullish breaker, which is this high here. And it's inside of an old Asian session, first present the fair value gap, in a bullish context that I was using on the interest that this was going to be treated as a inversion fair value gap, consequent encroachment level, midpoint of it, to send price higher, and I added more to it there. And you watch me do the actual manual close here, which I'm still interested to see if it can go higher. But with all the things going on inside of the next hour or less, I don't want to stand in front of that. I don't want to stand in front of Powell, the Fed chair. It's a loaded scenario for some pretty wild, explosive price action that may or may not even make any sense. You know what I mean? So That's the business today.
So looking at this, if you are to trade pre-market, there's a much higher degree of pain that you have to endure. Price is not going to move until it's time, say 8:30 or 9:30, etc. Look at the amount of drawdown he had to endure here. Price could have wicked below the swing low and stopped him out. But look at how much consolidation you have to hold through where price is not doing very much and is just kind of going sideways. From his first entry to his exit, it took him about an hour and a half. How long on average do you hold your trades? 5 minutes? 15 minutes? 30 minutes? My point is to understand the time of day you are trading and how the market could behave. Also, to understand your own trading style. If you're only comfortable with scalping for a few minutes, you may want to wait for when the price action is obvious. Like here at 7 a.m. when we had this confirmation, you could take it off above, let's say this high up here. If you're uncomfortable with the volatility during the high impact news events, avoid it completely. Give yourself permission to not trade that day or that session. Just like ICT here, he took off his trade because he wanted to avoid the unpredictable high impact news with the Feds. Anyways, this was a relatively short lecture. I hope you were able to get some insight. I hope you liked my take on this topic. Please give this video a like, subscribe, and until I catch you next time, safe trading.